What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 7th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about the price action in the indices. We had, a crazy reaction off that NFP number this morning. We're going to go under the hood. We'll check out our sectors and style factors. We'll talk about some of my trades for the day, and then we'll wrap up with some options order flow. Before I jump into all of that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right into it here, and let's take a look. So to start things off, this morning we had our non-farm payrolls number. It comes out on the first Friday of every month, and the number was apparently like the biggest miss on record, and it was like a multi-standard deviation miss. We were supposed to create somewhere around the neighborhood of 900,000 jobs. We only created, I believe, it was like 266,000. So when you first hear that, you might be like, oh, wow, that's pretty bad. The market must have fallen after that, right? And our box scores, we ended up having the S&P 500 up 0.73%. We had the NASDAQ QQQ finish up 0.81%. We had the IWM small caps finish up 1.26%. And we had the Dow Jones close up 0.69%. And when we look here, essentially, what happened here was a lot of the worries in the market have been, oh, is the Fed going to taper? Are they going to do less in bond purchases? Are they going to raise interest rates? And once we got that really weak jobs number, then it was like, oh my gosh, that risk is, at least for the time being, off the table. So you can see here, really nice positive day for the market. Yesterday, surprisingly, we broke out, and you see we finished a smidge above this monthly value area. Today we got some really nice follow through. So we are now trading at new all-time highs, and there's no more resistance on the chart. So we are looking very good. And if we pull up our NQ, you can see NQ finished up 0.87%. NQ is looking like, oh my gosh, this thing is a train wreck. Over the past 2 days, we've had some really nice price action. You can see today we explored within that monthly value area, but we actually closed slightly below it. But yeah, looking much better in the NASDAQ. And if we go to the weekly chart, you can see here we are still a ways off from that weekly value area, but we are making some progress here. And then pulling up our Russell, closed up 1.22%. We pretty much explored this entire monthly value area. But the Russell has been a big chop fest for the past couple months. And then Dow Jones has been acting the best out of these indices. You can see today it was only up, I believe it was like 0.69%. Yeah, you can see here, this has had a really nice breakout, and this was the day 2 follow through. So Dow Jones definitely been incredibly strong. And basically, like, what we are seeing now is, it's very weird because the reaction from the markets, at first it was like, oh man, does this mean growth is now decelerating in the economy? But the way that the jobs number was interpreted, I'm just seeing like some narratives that went around. It's like, oh, there's not enough people to fill these jobs that want the jobs, and that's why the jobs aren't being created. There's a narrative like because people are receiving such great unemployment benefits, they're just not taking jobs. We'll have to see how it plays out. For market breadth, you can see very positive across the board here, much better breadth in the past couple days. And you can see we had the best breadth in the NASDAQ. We had 81% advancers. But yeah, really solid all around here. And then we pull up our Finviz heat map. Yeah, you can see, same exact thing. Very nice breadth. You can see a nice balance to all these tech names. This travel and leisure area, is very strong. But yeah, overall, just really nice strength across the board. And then we pull up our sectors here. gold miners are actually in the top slot in terms of momentum. And then you can see we have materials and energy. A lot of those more like reflationary areas of the market have really been on fire. And you can see at the bottom of our list, even these names got bounces. So you can see the Solar Energy Fund got a bounce. The ARK Innovation Fund got a bounce. Yeah, so really just green across the screen. Then checking out our style factors. Our best performing style factor was high beta. And then you can see following that, we had international momentum with a really strong day. We had cyclicals with a very strong day as well. But yeah, this one as well for our style factors, really nice broad strength across the board. That's essentially like the theme of today, where like everything for the most part went up. So let's take a look. We'll pull up my trades for the day. And let's pull these up. Yeah, so for my trades, I tried not to be too active this morning when the market was really ripping higher. I had, a very fair amount of exposure on the books already, so I wasn't really feeling any desire to like chase the up move or anything like that. I actually bought some puts on the financials pretty much off the open for September, just in case this was sort of a move where, oh my gosh, the market's pricing in this reflation. Now growth is slowing. And just in case some of the steam came out of these, the financials were pretty resilient though. So you can see here, this ended up being like an initial shock off the open, but it looks like dip buyers came into these financials. They ended up closing at a new all-time high. So if we don't get any sort of weakness or pullback to this 20-day moving average, this one will be kept on a pretty tight leash. Yeah, you can see these financials are pretty extended at this point. So we had that. I had some ARK calls on the books. Closed those out for a small winner here. ARK, this was one where it got very oversold, and I was playing it for that oversold bounce. But when I look here, it wasn't as strong as I would have liked it to be. So ARK, I noticed from early on, auctioned up to this 200-day moving average, but it immediately was sold. So in terms of that jobs number, the initial reaction was bonds are bid, growth is bid, all that stuff. Value was offered. Then throughout the day, that kind of reversed. So I noticed that, and I was able to exit this for a winner. But yeah, ARK, the trend is not positive at all. So that's not something I want to stick with or have as a core position or anything like that. So yeah, I scalped out of that one. Towards the end of the day, I entered some Q's calls. This was at 217. This was when we got the nice dip in the market. So I entered off that dip because I saw the breadth was holding up very nicely. And then I closed a third of my Altria Butterfly for a small winner. I closed out for 75 cents. I'd paid 69 cents. And this rarely happens to me when I enter butterflies, but I felt that it was prudent to close another part of this because this stock actually is just moving up pretty much in a straight line here. So you can see it just ripped past this monthly point of control. And with that butterfly, I want this stock to pin around $49. If this thing starts ripping up to this monthly value area high, that's where I'll lose that trade. So I took off 2/3 of this in total for a small winner. Yeah, this one actually looks pretty nice for a long entry here as well. This MO. And then in terms of stock trades, let's see here. So I closed out of my Snow common shares for $207.80. I had paid $199.83. And I just said here, good for a balance, but I'd rather allocate to a name showing relative strength. So this one, it was a nice little bounce play. So we got a couple percent off this. But yeah, Snow as well. I'm glad that I exited this one when I did, because this one, it closed weak. A very powerful bounce off the open, but yeah, these names, the really high growth names that have high price to sales, they're very expensive. Those are still out of favor. And I think this goes back to a point where we're in this weird scenario where job growth is slowing. So it's like, all right, the economy might be slowing, but we're printing so much money, and this monetary policy is so accommodative that we just have this inflation that's taking place in financial markets and now elsewhere. So we're in this weird situation where it's like, normally in a growth slowing environment, it's like, okay, let me get long these growth stocks. But this, it almost seems like I would be surprised if the narrative doesn't turn into like, oh, are we entering stagflation or something like that? And if you're in a stagflationary environment, this is still a really precarious environment for these growth stocks. So with these, like, I'm just trying to listen to what the market is saying, and the market's saying, hey, maybe play these for a bounce, but this isn't something you want to make much more than a day trade. So yeah, that was nice. Took that one off for a winner. And then Paya was a name that I had added for earnings at $10.50. Paya reported earnings, and I thought the earnings were pretty fine. They're a payment processing company. They do about like 25 billion or 35 billion in volume. And what I'm noticing with pretty much all these SPACs is, as well, it's just not really time for these SPACs. They had their crash. Like when I look at this SPAC ETF, this thing is still in the doldrums. So Paya, I still feel pretty confident that it's a good company. But yeah, it's just if the momentum is not there, I don't want to be there. So yeah, I stopped out of that one. But that was about it. The rest of my positions, I really just kind of let them go. I think we could see continued strength into options expiration. So I didn't want to do all that much on the trading side. So those are mine for today. And then let's pull up our options order flow. Let's see what we got here. So you can see we had some Tesla flow off the open. A lot of these FANG names, and you can see MasterCard as well. Let's pull up MasterCard. That one had a nice pullback. I want to see where that closed. Okay, MasterCard, yeah, that one was sold. You can see some Facebook. GDX, gold miners are showing a really nice price momentum right now. And yeah, gold miners tag this upper Bollinger Band. And on the weekly chart, definitely getting very interesting here. It looks like this could be a trend change for those gold miners. And there were some names. Oracle. This one has been on a tear. I saw this one come down. I didn't want to chase this order because this stock is a bit extended. This is the weekly chart. On the daily, yeah, you can see, pretty extended here. This is not really where I want to chase it. And then Plan, this one, yeah, this is another one that was pretty much sold. And then towards the end of the day, you can see here right after the close, we had some hedges come down. So we had some IWM hedges and we had some SPY hedges. So overall, not a ton of order flow for today. Yeah, it looks like everyone's still a little bit like, oh my gosh, where do I even go in this market? So yeah, I'm noticing a lot of the flow is in like mega cap, like very well established names. With that being said, that about does it for this market recap video. Hope you all had an awesome trading week, and I will see you all on Monday.